Well, James, so pumped to get into your money story. I know that there's been a lot of stuff that's happened. You got a pretty interesting background in terms of how you ended up here. But before we get into the money stuff, I thought maybe a good place to start was to maybe just talk about your career background and sort of how you've ended up where you are right now.
Yeah, so I studied finance in uni, and in my second year, I got an internship at Macquarie, and I have been there ever since.
Nice.
The same kind of division. I've moved around a little bit within that. For the last 6 years, I've been working in the corporate and leverage finance division. So basically as an analyst working on lending for large corporates.
Nice. And what about from a money perspective, like with saving and investing, obviously working sort of in finance and, for a bank? We started working together a little while ago, but not that long ago. What had you been doing, from a financial perspective up until now?
Yeah, I think before I started work, I was always a really good saver. I was, putting money underneath my mattress, for example. My dad would give us some money to go to the Easter show. I would go on no rides, get no show bags, and just save my money.
Well done. You're part of the 1%, so congratulations.
So it was always a big focus for me. And then when I started working, I had to move out of home because I'm from down the South Coast, so I wasn't able to live and work from home. I kind of had to move out straight away. So all of a sudden, all my money was going to rent. And I was struggling to save in those early years, but started to earn a bit more money and, was able to save more and over time built up a deposit. And when I was in my mid-20s, in 2017, I was able to buy my first property. I kind of had the view that I just wanted to get into the market as quickly as possible. So as soon as I had the deposit for something that I could buy as cheap as possible, I was just going to buy it. I think at that time I was quite busy at work because I just shifted from small business lending into the corporate lending, which was a little bit more stressful from a time perspective. So I didn't really have the time to do the research into the property. And this is where I kind of went down the rabbit hole of off the plan. Because it's basically just you walk into the nice showroom and you're like, oh, I like that one. And they give you a nice brochure and there's no haggling on the price. It's like, this is the price. So it's really off the shelf. And I think that's what appealed to me. And as well, in the small business part of lending, we do some lending to directors who, have property interests and things like that. And I'd seen a few instances where people were buying off the plan. Then before they would even settle on their mortgage, after it was built, they basically sold it and then made all of the profit without even taking out the loan.
Sounds so good, right?
It sounds great. It's great if the property market's going like this, but as you would know, if you've looked at the property market over the last 10 years, 2017, there was a dip. And the dip was because of basically oversupply of apartments. I bought an apartment. I bought the cheapest apartment in the block, which was a ground floor, south-facing, just a little one bedroom. And at the time I was like, well, I'll live in this when it finishes. It was meant to be finished in 6 months. It didn't finish until 2019. So I was sitting on it for 2 years. They had my deposit, but I wasn't getting any end product. And because I wanted to live in it, at that time, a one bedroom made sense. But in the intervening years, I'd gotten a girlfriend, I started earning a bit more money, and I was like, well, this apartment isn't really going to work. So when it finally kind of settled, I moved into it for 6 months, and I was like, I'm just going to move out. And so I get the capital gains treatment and the first home buyers, all of those sort of benefits. And then my partner and I at the time, we rented once that 6 month period was up, and I kept it as an investment property. Once I got tenants in there, I was getting calls from our property manager all the time with the same issue. There was a lot of dampness, and then there ended up being mold. The problem was it was getting no direct sunlight. It was really sort of closed in. Where the one window in the living room that opened, the builders told me that I wasn't able to open it because it obstructed a fire exit. And that is just something that when you look at the brochure, you've got no idea. You've got no idea that that's going to be the case. And because you can't step inside and see it and feel it, I had no idea really that it would get no sunlight. I mean, now I know, and I would know what aspect to buy. But at that time, I didn't. So I ended up with this liability. When I settled on it, the bank valuation was substantially less than I paid, and my dad had to come in and put a guarantee in just so I didn't have to pay LMI because I had a 20% deposit. And it was just a really stressful time. And then sort of COVID happened. So I moved in like late 2019 and then moved out in like April or May 2020, just as COVID had hit.
Right. Yeah.
So I was actually
getting out of the one bedroom bunker though, just in time to get locked into your house. For,
that's a very good point. Yeah.
The mold trap.
It got to the point where like I would see my phone ring and I saw my property manager's name and my heart would sink. I'd be like, oh, I just don't want to have to deal with this.
Yeah.
And then I started, investigating options such as, I looked at this dehumidifier that would work through the ducted aircon vent to get that installed to try and get some of that moisture out. Because I bought the tenants a dehumidifier, but it kind of only went so far. They ended up leaving. They broke their lease early. Don't blame them. And then someone else came in and started complaining about the same problem. And, it got to sort of mid 2021. And then as you would know, the property market just went bananas over that time. So late 2021, I kind of spoke to the selling agent with the company that I was leasing it through and just said, hey, like, what do you think I could get for this? And he said, well, I just sold 2 one-bedrooms in brand new blocks in the vicinity for, $50K more than I paid. And I was like, okay, well, can I put it up for sale? That weekend had 3 people go through, 2 people were interested, and he basically just bid them up. And then I ended up getting like a lot more than I paid for it. So I managed to get out. If I think about all of like the stress and the cost, like the cost that went into it and the loan and everything, it probably about broke even. So I didn't, you hear some horror stories where people lose a lot of money. So I'm thankful that I didn't lose a lot of money. I managed to get all my equity out. So I had a bit of cash sitting there. And at that time, my partner and I, we broke up. And so I was sitting there being like, oh, don't really know. I've got a bit of cash from that sale. I might just put it in shares. So I just put it in some direct shares. And they didn't do that great. They some did good, some did bad on the balance. They kind of broke even.
In 2021?
Specky picked.
There were a few specky picks.
Well, you're in the right room, James. Tell me more, Siobhan
exactly.
says.
Tell me
she
what
loves
mine.
a good specky, this woman.
Ali wasn't happy with some of those.
But you held on to them.
I'm still holding
now.
on to them. I think there's a chance they may come back one day.
There's a believer.
Just think of those capital losses that you can use to
So that was the other thing Ali and I spoke about. Like when you need the capital losses, maybe we can think about that.
Yeah, well, that'll be soon enough with Ali's guidance, I'm sure. But I think that really talks to some of the risks that a lot of people don't think about too much of off-the-plan properties. That it is, I certainly see the appeal that you go, well, that's the price. Does that work for me? I can lock it in now. If the value goes up, I'm going to make a bit of money. But you can't see it. You can't foresee some of the issues that might come with that. And I think at that time as well, like valuations being down, the other thing that impacted the property markets around 2017 was when the Banking Royal Commission happened. And then they changed all of these lending standards for banks and mortgage brokers. That previously it was just like everyone's spending $100 a week on their whole living expenses, and the Royal Commission was like, well, maybe you should ask a few more questions to see if that number is actually correct. And then all of a sudden everyone's borrowing capacity went way down, and you're sort of left holding the bag. Thankfully for you though, you're able to leverage family to make it so that you weren't either having to go take out a personal loan, use a bunch of savings, forfeit your property deposit, but a total nightmare. And I've seen too many people that have gone down that path and had all sorts of random stuff go wrong. The appeal is there, but for me, I'm just like, it's just not worth the risk. Maybe when you get to the point, and I have had clients that have literally like millions and millions and millions of dollars, and then at that point it's like, well, they can absorb all of that risk, that it's not really as much of an issue, and then you sort of take a punt and you get rewarded, or you can get rewarded for that upside. But if this is your first go at it, it's a pretty stressful experience as well.
Yeah, I work in banking, so I was working right over the Royal Commission, and we were doing personal lending at that time to directors for home loans, and every month there was some new thing that we had to do extra. For example, rent, like if a person was in a shared lease with someone, you had to get the income statements for the other person to show that they could service their half of the rent if you were going to apply half the rent to this person. You couldn't just assume it. It was things like that, and it was just something new every day. It was crazy. But the other thing, so my dad was going to give a guarantee. He ended up not being able to do that because one of the things that banks were stopping then was guarantees where there's no direct financial benefit. So Dad had to basically take out a home loan against our home because at that time it was unencumbered. He had no mortgage. And then I just direct debited the repayments on that loan. So the loan was in his name, and I just kind of paid it off on the side. And then when I sold it, I just paid it out.
Interesting.
But yeah, that was another sort of thing of having 2 years between when you apply and you get, a pre-approval or whatever they give you at that time to actually formal approval and settling on the loan.
Yeah, a lot can change, and it's stuff that you wouldn't expect. Like no one would have predicted that was going to have as much of an impact that it did. And I suppose that goes back to the risk. And so you've been working with us for a little while now. Tell us, but before you came to us, what was going on for you at that time?
Yeah, so I guess following a little bit on from what I was talking about before, after I'd sold that property, I started to sort of focus a bit more on triathlon. So that was always a hobby of mine, and at that point I'd probably been doing it for 2 years. But I started to get quite serious, and I actually was sponsored and was starting to race really competitively, and was seriously considering going part-time at work and going professional. So I started to kind of stop thinking about my savings and my wealth and just kind of focusing on that a little bit. And it's
buying expensive bikes.
It's a very expensive sport. Expensive bikes, traveling, all these sorts of things. So I kind of made that my thing for a year and a half, 2 years. So on that sponsored team, one of the sort of big things of that was going to the World Championships, and they sort of, give you a whole bunch of stuff to train for it. Then they pay for you to fly over there, and they'll pay for your accommodation, pay for your race entry, and then, you do the race. And so I had spent a lot of time training, and I had gotten 5 or 6 weeks off work and ready to kind of do my last 3 weeks of training and then fly over there. And then on the first day of my leave, I went out for a bike ride and I got hit by a car. So I ended up in the back of an ambulance. I had, I've got a scar down my arm, but basically I broke it and had to get a plate in there and had to get it operated on. So I wasn't able to race in those World Championships. The bike the sponsors gave me, which was all like painted and everything, that was completely destroyed.
Oh no.
And I probably had 2 months off work. Just was in hospital for a while, and then just getting back into, I couldn't use my arm for a while, for a long time actually. And then even for a few months after that, it was just causing pain, and I was having sleeping problems. So there was a whole bunch of stuff that happened out of that. But what I did kind of realize was it just felt very vulnerable to have something like that be able to take away everything that you had and like what you were sort of working towards. So I made the decision to kind of pull away from all of the triathlon stuff and then sort of move back towards work. And that was kind of around 2023. So at the same time, I had a compensation claim going through, and I don't know if you've ever dealt with any of those, but they take a very long time. So I had a really, really good lawyer who was working me through the whole process. But it took a whole year, but mid last year, I ended up getting an outcome on that and got a huge financial payout. So then I guess I had all the money from the sold property and also just general savings I had over that time. And then this big chunk of money comes in and I'm like, okay, I've got more money than I've ever had in my life and more money than I know what to do with. Maybe I buy a property to live in and something that's really good, something that, a house or like a terrace or something like that. At the same time, I decided because at the time I was living in the Southern Shire, so a little bit out of Sydney. I kind of wanted to come in a bit closer, so the commute was quite long. So I was looking around Alexandria, Erskineville area, and I was looking for a terrace. And at that point, my budget was sort of around 4-ish. And then, looking at realestate.com sold and was like, oh, there's one. Oh, cool. And you go to the opens and you look around and, they put the price guide at 1.3 or whatever.
Yeah.
And then, a few weeks and you start talking to the agent, like, like that's good. That's a competitive offer. And then you'll get a text from the agent 2 weeks later. Oh, someone's just put an offer for 1.7. If anyone can go above that, let us know. Otherwise, this property's going to sell by midday tomorrow. Yeah. And that happened, I don't know, 5 or 6 times over a period of 6 months. And I kind of just was like, I can't get what I want. And I've got a new partner now. We've been together for a year and a few months.
Yeah.
So at the time that I was looking to buy, I was also like, well, whatever I buy now may not be something that I want in 3, 4, 5 years.
Yeah.
So then I'm like, okay, well, now what do I do with my money? And one of the last properties I tried on, the agent said to me, a buyer's agent just came in and just outbid everyone who was already sort of considering it. They just come in guns blazing. And then at that time I was like, oh, buyer's agent. I have heard of the term. I've sort of looked into it a little bit, but not in any great detail. So it was sort of on my mind. I started talking to people about it and I found that opinion on it was very divided. Some people were like, oh yeah, like I used a buyer's agent. Best thing I ever did.
Yeah.
Like, so glad I did it. And then other people were like, no, never, would never use a buyer's agent. As if you'd buy a property that you can't see yourself, like if you're buying an estate, or as if you would trust someone else to do all of that, especially if they were a real estate agent. Barriers to entry for buyer's agents are really low, blah, 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 blah. And my partner now, she's a lawyer and she's very risk focused. So she was kind of picking apart everything about it and really challenging me on whether it's something I should do. And it was actually her mother who said, well, why don't you just go see a financial advisor? And I was like, financial advisor? I work in finance. As if I would get someone else to tell me how to deal with my money. I know how to deal with my money. And then
Plus you're good at saving as well, right? Which is
well, that's kind of what I told myself, right? Yeah. And we'll get into it later when Ali went through my expenses. I think I was a good saver, and over time, as I earned more, lifestyle creep definitely came into it.
Happens.
But I thought about it more and I was like, well, what have I got to lose? And then I think I saw some of your videos, Ben, on Instagram, and I was like, oh, maybe I'll just do the free or the consultation that you do end up paying for, which is worth it, by the way.
Yeah. Nice one.
So I spoke with Lachlan.
Yeah.
And he, we got along really well, and I guess I decided it was something that I wanted to do. And he kind of told me the benefits, and I think the thing that really resonated was this decision paralysis. It was sort of like after I decided that maybe buying my own home wasn't the best idea, and then I was like, well, do I put it in shares? Do I get an investment property? If I get an investment property, do I use a buyer's agent or not? All of them might be, good ideas, but I would never have the conviction to go with any one mix or any one solely go with one. So I feel like I just needed that extra layer of review. Yeah. And I think I was starting to realize that I was probably overly invested past things with investment property. So off the plan, I was a little bit cautious to go into property, but then also my direct shares, some of them went really bad, and I was a little bit cautious to go into shares. Yeah. So I was like, I just can't do this. I need someone to kind of help me through it.
Yeah.
And that's how I got into Pivot.
Nice. And I think that when the decisions get bigger, especially at that level with some of the things that you mentioned there, that it's like you see the opportunity, you don't want to stuff it up as well. And it can be really hard, because if you've got $50 or even $5,000 in your bank account, it's pretty clear, what makes sense and what doesn't. 50,000, you get a few more options. 500,000, you've got more options again. And so then it's like, well, yeah, you could buy a home, you could buy an investment property, maybe you could buy two, you could crank a whole bunch of shares, but these are all good things to do, but there's only one thing that's best for you. But look, I feel like you covered so much ground there, so I'm keen to just wind back and unpack a little bit. I did think, here I was so naive, thinking that the biggest risk of doing triathlons was having your mates make fun of you for having to wear those clothes all the time. But that's incredible.
What a sliding doors moment.
Yeah.
Really.
I think the other thing is, it's really common. Obviously a lot of my friendship circles are within sort of triathlon. And, I've got friends that have been hit by a car 3 times. I've got some that have been once or twice. It's very common. Yeah. And, I was doing it for 5 years before sort of my accident happened. And I thought, I was like, oh, it's never going to happen to me. I'm really careful. And, it was just the car was completely in the wrong. I was going through a roundabout and they just did not give way and just went straight into me.
Yeah, wow.
So it's just a risk you take.
You can't
riding a
protect
bike.
You can't protect against that either.
Yeah.
Wouldn't you? Surely you'd stop after the first time though, or at least do it less for your person that got, or the second time. Like if not the first time, surely the second time.
Triathletes can be very stubborn.
Yeah, that's.
I've really seen it though, where like I was at a roundabout and this car just went straight into a cyclist, and they were in the right. They were in, like the car was in the wrong. Anyway.
But being in the right doesn't do anything when it's like you're just sitting there on a bike, you know, with very limited protection in place.
Maybe in a car, like low speed, you know, collision, being in the right, it's like, oh, well, you know, I just have to go get my bumper fixed or whatever. But when you're on a bike, you're so vulnerable. It doesn't matter if they're going 20 Ks an hour. Like if they hit you, you're going to come off and you're going to break something most likely.
Yeah. And so it's interesting that the point that you mentioned about like feeling a bit exposed from a money perspective, this is something that we saw quite a lot in COVID, more from people that had maybe been at it for a little while. And, you know, we work with a lot of younger people. The people we work with are generally quite focused on their lifestyle. And, you know, we're really big on talking about that people should find the right balance between enjoy yourself as much as you can today, but also make sure that you're being smart and setting up your future. And we found that there were quite a lot of our clients that realized when COVID happened, and a lot of them work in tech and finance and areas that were not really that impacted. But I think everyone was so scared at the start because no one really knew what was happening. And it's like, are these companies going to shut down? Is the whole country going to shut down? You know, have I got enough money? Have I got security? Can I last this out? And even for people that had a decent little whack of cash behind them, they're like, well, we're feeling actually quite exposed now, and we thought that balance would look like this, but actually maybe, you know, we need to be a little bit more tilted so that we've got, you know, even more peace of mind as well. So it's interesting to see it, you know, happen in that way based on something slightly different, but the feeling is the same. That I think sometimes it takes that and at some sort of external shock or something that catches you a little bit off guard for you to realize how you really feel about risk.
And I think for me, I wasn't in a position where I was reliant on any income from doing the sport. But I think it was something that I was going towards. And then I realized, okay, that's not what I want. I don't want to have, you know, my not only income for me, but my family, like supporting a family on an income that is like, all it would take is one accident and you've lost your earning capacity.
Yeah, 100%. And so you talked about like the compensation payout and the process around that. Can you talk us through a bit of the you know, how you felt, the mindset stuff as that was coming together and then when it eventually happened?
Yeah, it was a bit of a roller coaster. And that's largely because I was unfamiliar with the process. I was unfamiliar with what I was entitled to. And, you know, like as good as my lawyer was, there's no way he could tell me after it happened, you can bank on getting this.
Yeah.
So he would never give me dollar figures. And in my head, I was sort of like 5 figures, that might, low 5 figures would be something that would be really helpful, and maybe that'll happen, or maybe I'll get nothing, or maybe my accident wasn't that bad that I won't get anything. Yeah. So I went through a lot of the early phase thinking through that, and then there was a period of like silence, and I sort of just kind of forgot about it almost. And then, you know, in early 2024, when we started having to actually lodge all of our kind of proceedings through to the insurer and, you know, talk about how much we were claiming from them, we started to dig into it a lot. And I had to end up doing psychology assessments. So I had to do 2 psychology assessments, one for my lawyer and one for the insurer's lawyer, and then a physical assessment, again, for the lawyer and the insurer's lawyer. And the psychological ones were really challenging because they're assessing you, they're not treating you. So they ask you questions that are really emotion provoking. Yeah. And then they just sit there and look at you and then write down. Like it was really, like I was really shook after it.
Yeah.
And then I was also seeing a psychologist for treatment throughout the whole period as well. Yeah. And there was some, like particularly probably about 9 months after, like some early PTSD signs that I hadn't actually picked up, but he was able to pick up just through targeted questions and other kind of exposure therapy type things. Mm-hmm. So I started to just be all over the place. To be honest, it was a difficult time, but once we started getting into actually submitting the claim and we started getting into the dollar figures, a lot of the compensation came out of my impact to work. And basically, for a period of time, I wasn't able to really take on any extra responsibilities. I could just kind of do what I was doing. And I had low tolerance for extra work and extra stress. And, my manager was really good and he kind of saw that and kind of incubated me through that process.
That's nice.
Which was very nice. And my lawyer made the comment
Make some notes here. Don't give them extra stress.
Well, my lawyer made the note that a lot of companies, when they get someone who's been impacted like this, they just don't care and they almost just try to push them out. And he's seen it time and time again. But in my case, I was very lucky. So the conversation was centered around like, okay, well, if the accident didn't happen, what was my career trajectory like? And if that kept going, where would I have been in the same position? And then extrapolate that out for the rest of my years. And the reason why the number ended up being in the six figures was I'm very young relative to people that are looking for compensation. So I was 29 at the time, and like relatively high income earner just because of my job in finance. So you combine those two factors and the end number starts to be, like, it ends up being really large. And the number we spoke about, that we were going to ask from the insurer, I was like, oh, okay, cool. He ended up getting triple that.
Yeah. Wow.
So it was just a very I was really stressed throughout the process because I thought that, some of the questions that the insurers were asking and sort of some of they were asking to interview my work colleagues and ask them about me and how I...
Wow, that seems pretty invasive.
Well, I think my lawyer basically said, no, you're not getting any of that.
Yeah.
They were just trying it on. He called their bluff, and this is why I think he's a very good lawyer. He just called all of their bluffs and said, no, this is what we want. If you don't do it, we're going to the tribunal or I think it's the insurance council. Yeah. And they just rolled over and it ended up hanging out. So,
nice.
Ended up being a really good outcome, and it was extremely relieving and a really good feeling to see a positive outcome out of all of that sort of turmoil.
Yeah, 100%. And so when you got once that was confirmed and you knew that the check was coming, or once it was in your bank account, what was your thinking that then, in terms, because I imagine that would be a pleasant surprise, a lot of relief, you're feeling good about it, but then, where did your mind go from a thinking about your finances perspective?
Well, the first thing I did was book a table at Aria.
Nice.
My girlfriend and I. So she helped me through the process a little bit because she's a lawyer, and she was able to help me with some of the legal aspects of it and how I interacted with my lawyer. So I was very appreciative of that. So I was like, okay, I'll take you out to Aria to say thank you. And I'm never going to have probably this amount of money in one go again. So I'll take this one time to splurge a little bit. Yeah. And then after that, I was sort of like, okay, what property can I afford in what area I want? I was very focused at that time that I wanted to buy a property.
And what was the thinking though around work with some other people in that position, and it's sort of there's a bit of pressure there that you got more money than you thought you might have at that point, and it's common when people get inheritances as well, that it can be a little bit scary in terms of wanting to actually you need to do something with it, but then also the doing something with it can be tricky as well.
It's just like a constant push-pull, you say, okay, I can't make a decision now, I'm just going to think about it more. And then you're like, it's literally this amount of money sitting in a bank account. I guess the one saving grace was interest rates are so high. Well, before the rate cut, they were high. They're still high now. Yeah. So it was getting a lot of, quite a bit of interest in the bank. So it didn't feel completely like it was wasted. Yeah. But relative to what you can earn on shares or an investment property, it's nothing. Yeah. But you feel bad not doing anything, and you feel bad thinking about maybe doing something. You're like, what if this goes bad and I just blow it all? It becomes, those feelings become heightened. And as you said before, if you had $5,000 or $50,000 even in your bank account, you probably wouldn't be that worried putting it in some index funds or something like that. But when it is a larger amount, you're kind of like, it's just a lot of money to do one thing with. Yeah,
100%. And so it's probably a good lead into my next question, that we've done a fair few things together, through your planning work, but what's the top sort of 2 or 3 that stand out for you?
Yeah, I think that the top thing was making me sit down and really think about my goals and what I wanted, not just in the short term, but in the long term, 5 and 10 years. And I said to Ali, I was like, I don't know. And he was like, no, I really want you to think about it. And it's just like, what is the most likely place you'll be in 5 and 10 years, and tell me what you want. And, you know, I guess I'd always shied away from thinking in that longer term because I was too worried to set my mind on any one thing. But he really challenged me on that. So I think that's one good thing. The second was all of like the modeling he was able to show. And he showed me the opportunity cost of doing nothing, the cost of buying my own home versus renting and then putting my money into some investment properties and some shares. And what does that look like over 5, 10, 20 and 30 years? And at that 30-year mark, it was just shocking to me. And that's where I started to look into like this whole rent vesting concept, and there's stuff all over social media about it, comparing if you buy the same owner occupier versus the same, investment property and then rent something. This is kind of what the differences are. So I just got a lot of clarity about what the right decision was. And I actually was saying to myself multiple times, I'm so glad I didn't buy a property like to live in at that time. And then I came to see Ali, and he was able to kind of show me that.
Yeah, nice. And so, because obviously I'm completely biased as a financial planner, and as a financial planner that's seen like thousands of people's financial plans. But, as you said, you're considering property decisions like, 7-figure type decisions. It blows my mind that more people don't do that scenario analysis and the modeling before they buy property when you think about the real long-term impacts. But having, sort of thought about it yourself, even bought a property yourself, sort of started reloading, but then gotten some financial advice and gone through it in a really deliberate, considered and analytical way. I'm trying to, maybe it's a leading question, but like, how does that compare, or what difference did that make to the actual path that you ended up choosing?
Yeah, I guess, is your question like, why don't more people go see a financial advisor?
Just more specifically when people are buying property, that they don't run the numbers, because very few people actually do that. And it's like you're making at least a $500,000 decision, probably $1 million plus decision. And like you say, like investment property, own home, see the numbers, see it compound what the strategy could be.
I've got a few views on this, and so my sister also recently just bought an investment property, and she's been looking for a long time, and she has kind of struggled with a lot of things to do with property. Like she's kind of she's seen the property market kind of just edge away from what she was able to afford. She's given up and decided she wants to come back into it. And something that she always said that kind of I never agreed with, but I never really challenged her on, was renting is dead money. You're just paying for someone else's mortgage. And you hear it from a lot of circles around.
All the time.
But it's very common. There is just this view that renting is a waste of money and you want to get into a property as quickly as possible. They just don't go that one extra layer to say, well, if you're renting, you're saving your capital, and then you can use that capital elsewhere, and that capital might be more efficiently used elsewhere. And maybe that's a factor of people who maybe don't work in finance, or don't work in or don't have that sort of analytical knowledge and training and expertise to kind of know about opportunity costs and know about other investment sort of opportunities, and they kind of just get sucked into social narratives that you see on social media, or what you just hear from your friends
and your parents as well. There's so much generational stuff.
The amount of times I've heard, you just got to get in the Sydney property market. That's all you got to do. Then you're set for life.
Doesn't matter how you do it.
Doesn't matter if you live in it. Just Sydney property. That's it.
Yeah, it's amazing. And sometimes you get lucky, but most of the time you don't. And of course, yes, if you're just renting and you're not doing any saving and you're not doing any investing, then you're gonna be poor forever. But if you're renting and then you're saving a bunch of money, and you're saving all of your borrowing capacity, and then you're redeploying that elsewhere, and then driving tax efficiencies on top, then of course you're going to be better off. Like it's just maths. It's not an opinion. It's like the numbers really don't lie.
I think that's 100% correct. But people just don't do the maths.
Yes. Yeah.
What was the big aha moment for you going through the process?
When Ali showed me the modeling outcomes and said, here's the outcome, or here's your net wealth when you retire if you buy your own home now with all your cash. And here it is if you buy 2 investment properties and put some money in shares and continue to invest in those shares, and then at some point take the equity out and then buy your home with 100% equity. And I was just like, wow. it was millions and millions of dollars difference. And that was definitely the moment where I was like, okay, I'm really glad I'm here right now. I'm in good hands.
Well, especially when you've got such a long runway as well, like you're in 20s, 30s, even early 40s, like you've got a lot of years for compounding. So it might be a small difference now, but then that's banked and put to work every single year. And then it's just growth and growth and growth. And so, look, you've touched on a few of the things already, but talking about like results and some of the tangible outcomes of our work together, what are the top things that stand out for you?
Yeah, I mean, one of the top things was just like an immediate saving, was just changing my super. I never looked at my super. I mean, maybe a couple of times I was interested to see what the balance was, but I never actually looked into the fees I was paying and what the alternatives were. And I think Ali saved me $1.5 to $2K a year, on just fees. Yeah. And then when you compound that over 20 or 30 years, I was like, he's just found me 30 grand. Or 40 grand or whatever it would be over time. And so that was just one that was like, it's just instant and it was such an easy thing. The other sort of thing was actually doing the work around how much cash I had, what I could do for deposits. And so he sort of said, I'm comfortable that you could buy 2 investment properties. So we'll start with one now and then a little bit we'll get you another one. And then he also was actually able to set up the automated like share investment things that go straight from my pay into. So we set up a Gen Life bond and we have a wrap account with just index funds. So all of that is kind of set up and it just happens now. And as of the weekend, I got my first investment property. So feeling good that everything's kind of set up and going along the way of like the plan. And I think the first time I got the plan, I was just like, oh, there's a lot of things here to do. But now I'm sitting here and I'm like, most of it's done. Yeah. And it wasn't really that difficult.
That's a huge amount of activity in a fairly short amount of time as well. But, congratulations on the property purchase. Well done. Obviously a lot more deliberate with your strategy and, the plan around that now. And so sounds like you've got a good path forward. How did this time around compare to the earlier property purchase?
Much better. I did end up going with a buyer's agent. I bought up in Brisbane. So it's a house. I could see it. Well, I got videos of it from my buyer's agent. It's had a really big balcony on the back that got all of the east sun. And I feel like that was just it won't be moldy. That was a really kind of just good moment for me. But having the buyer's agent, so I ended up having a chat with Kelly, who's been on the podcast before. Yeah. And she absolutely sold me on using a buyer's agent. She was extremely impressive and, sort of made me comfortable with a lot of things that I maybe not have been comfortable. She doesn't do, obviously, Brisbane. She does more Sydney. So she recommended me to Longview, which I think the head of buyers advocacy there worked with her when she was a valuer. And he has like 40 years of experience. And I spoke to him and he was very similar to Kelly in that very experienced, not just like a real estate agent who got sick of selling. Yeah. He knew his stuff. He had a valuation background. So every property he recommended, he did an appraisal and had a lot of data and analytics that went into that appraisal. So me I was hands-on with the process. I think more hands-on than he expected. I think he gets a lot of clients that just like, go find me something. Here's the brief. Here's the budget. Find me something. Come back when you get something. Where I was like, I want to know what's going on. I want to see the ones that you're not liking because I want to know sort of what made you not like that. And there was probably about 30 properties that they sort of just rejected on one thing or another. And I was like, if I looked at that property, I wouldn't have picked that up. And I was like, instant value right there. Nice. And they were extremely selective, and just gave me the confidence to know that when we did find one, and they were sort of like, we recommend you buy this, that it was a good property and everything that I've seen. So we got the building and pest reports, and they were all really good. I think the building inspector said this is like out of 150 properties that are this style in this area, this is like the best one. So I was like, okay, good pick.
Nice. And so I think it's good to have people around you, supporting you on the journey. But like with buyer's agents, I feel like the barrier for a lot of people is, am I going to get value? You're going to pay a fee. It's not a cheap fee in working with them. It's not a cheap fee at all. Yeah. You mentioned a couple of things there, but what makes those fees worth paying to you?
I think buying in a state, it's obvious, like having someone up there, like you don't have to fly up there and look. It's just really impractical to do that. As well, Brisbane is a very different market to Sydney, and there are other things you got to think about, like flood zones and other sort of things. So, and also, like they give you a weekend back to you. You don't have to go. Like, one of the most stressful things about when I was looking is you'd have a list of like 10 properties you want to look at all over Sydney, and you're just driving, or your whole Saturday is consumed by looking. It gets really draining. Having their conviction over putting like an offer in, and we put an offer in on 2. The first one we didn't get. We missed out by like 2K or something. In Brisbane, they don't go to auction. It's almost like a silent auction. It's like everyone puts in an offer before a certain time, and they'll just go with the highest one. So if you didn't put the highest offer in, you don't have a chance to go and rebid. That was very confusing to me. I was used to getting harassed by agents being like, pay more. Wow. And the agents still do the thing, like they still they'll put on the listing. It's like, oh, this property's would suit buyers at around 820 grand, and then it goes for like 870. That still happens. So if I was looking on my own and I looked at these 2 properties, I probably would have bid way less than what we ended up bidding. But it gave me conviction that I had bidded right, because there were like 5 or 6 bids just below mine. So we were in the right ballpark. It was just couple of $1,000s here or there. And then on the second one, we went a little bit higher, and then we managed to beat the other bid by 1K.
Oh, nice. Well, that's where the valuation background on a buyer's agent really helps, because you know that they can run the numbers and it's all supported. And I know Kelly does the same thing as well.
Exactly. It's extremely helpful. Like, it just gives you just way more conviction. Like, otherwise you don't really know. I think a lot of people also talk about the off-market opportunities. We saw a few off-markets. It didn't really play out for my purchase. It was on market. But I do know in some other instances. So my sister got an off-market opportunity, and her valuation came in like 50 grand higher than what she paid. She got a really, really good deal, mainly because she was able to move quickly. So they can help you there as well. She used a buyer's agent, not the same one as I did. She used another one. But I didn't really see that benefit in this instance, but I saw benefits in other ways. And I think I got an extremely good property, and you'll hear Jack Henderson talk all the time. Like, it doesn't really matter what part of the cycle you buy in. If you buy a really good quality property, it's just always going to do well.
100%. And so how are you feeling about your money now compared to how you were feeling before we started working together?
So much better. I feel just like I've got the conviction that it's all kind of working for me, and that my 5-10 year goals will be realized, provided some big black swan event doesn't happen. I've just kind of got to wait it out, live my life, and keep sort of following the plan.
Love it.
How does that make you feel now?
Relieved.
Even if there was a big black swan event, we all know that things kind of come back anyway.
Correct. That's true.
And so before people get into financial advice, they often don't know how it's going to work or what to expect. What surprised you the most about the process?
I guess probably how two-way it was. So I was a bit worried that Ali would pick apart everything that, I was spending on and sort of really grill me and then say, no, you have to kind of do it this way. He was very look, there's a balance here between lifestyle and investing and building wealth. And it's up to you. It's a personal thing. And we can just tweak it how you want. So I felt like he was definitely guiding me towards what averages were. You should be roughly spending about this much on this. You're spending a bit more. Do you need that? So he did it in a way where I didn't feel like I was kind of being judged and being told I had to save more. It was more like, here's kind of what's average. Here's kind of where you are. Does that kind of sit well with you? And in some instances, I was like, yes, this matters to me. I do want to spend a bit more on that. And then other things, I was like, hey, you know what? I just haven't really looked into this. Maybe I can save there. And then was able to save a lot in various parts. I think that was probably the most surprising thing, just how collaborative it was and how we were able to just work together to find the right balance.
Yeah, nice. And talking of Ali, what would you say? What is the biggest benefits? You mentioned some things there already, but what are the biggest benefit that you think he brings to your life?
He is basically that extra voice where, it was funny when we went through like the training program, he kind of skipped over a lot because he was like, oh, like you work in finance, we don't need to talk about some of these things. And at the time I was sort of like, oh, you know, again, that thought was creeping in about like, oh, like, do I really need financial advice? I work in finance, like I should be able to do this. But the more and more like I sit down with Ali, he is just like impartial and doesn't have the personal kind of involvement in everything and every decision. He's able to just pull all of the emotion out and say, here's the hard facts, here's the numbers, here's the analysis. You're an analyst, have a look at that.
Yeah.
And then I look at it that way and I'm like, oh, this makes a lot of sense. Definitely that.
And then you balance it against the how you feel about it, because it's like the analysis is important, how you feel is important, but it's not one. Or if you go all on how you feel, you're not going to make good
Correct,
decisions.
yeah.
If you go all on analysis, you're not going to enjoy what you're doing as well. And so I think that mix is really important.
Yeah, it's so like, you know, what I do, you know, in the decisions I make and the recommendations I make to clients, which are businesses. It's interesting. I do a similar thing. Like I pull apart all the data and I present them with something, and I'm like, these are the decisions that, you know, you should make, or these are the implications if you don't do it this way or whatever. And it's their business, it's their life. Like they're really emotionally invested, so it's beneficial for them to have that thing. And I look at it from my perspective with Ali, and it's very similar. Like when you're dealing with people, business owners, like they're very switched on and know about finance and things like that. It's the same for me. It's just when you're dealing with your own sort of thing that's really personal and really emotional, it can be very clouded. So it's really helpful to have someone be able to just guide you through it.
Yeah, 100%. And how, random question, but how would you describe Ali to your friends?
He is extremely caring, but extremely good at telling you something that you should do without being really directive and making it feel really like in just a fluffy, friendly environment. So then I feel like I'm more likely to go with the right decision.
So you're saying he's inception planning ideas into your head, basically?
Yeah, a little bit.
Okay, I like it. For just talking about like advice, and for someone that might be thinking about this but sitting on the fence, what would your advice to them be?
My advice would be like, there's sort of no downside really to just having a call and talking about some of the options and kind of what you've been thinking, and then seeing like where you could go. I think maybe a lot of people just have the conversation in their head, but never actually just have that initial consult or have that initial call and actually speak to someone in the advice industry. Just like give it a go, because you might be surprised. Like it took me probably a month of milling on it before I actually just booked in that call and did the call. And then, at that time I was very unsure. And then after that call, I was like, okay, I'm like 80% sure. And then after like I went through the initial onboarding process, I was like, okay, I'm like 120% sure. So I think you don't know what you don't know. You've got to actually get into it and sort of understand your position and kind of where you could be, and see the benefits like that way. So yeah, just my advice would be just have a go. And there's like it's a while until you actually sign up and pay a bit of money for the advice. There's definitely a lot of stuff that you can figure out if it's right for you first without having to go all in.
And people that are sitting in that spot where they are on the fence, the big question for them is often, are the fees worth paying, or what makes them worth paying? So you mentioned a ton of stuff already, but like what makes the fees worth paying for you?
So being able to sleep at night, knowing that your money is looked after and is on the right trajectory, that's kind of, I guess, the easy or the intrinsic answer. The like hard numbers are, you can see savings straight away. So my example with the super, that's the initial fee is paid for just by the super saving, obviously in a longer term. But Ali looked at my tax return and saw, you paid capital gains here when you didn't need to. That was like $5,000. And I was like, okay, well, there's a bit of the fee as well. It was just these really small things where I would have never have sort of picked these things up. And even like looking at my savings, it was like, if you added all that up, he's already paid for himself not even thinking about the advice over the long term and all of the investment decisions and then how much money you make off those relative to what you might have done if you hadn't gotten advice.
100%, like the investment property, the bonds, the tax savings that come with that as well. Look, my final question for you is, if you could go back to 18-year-old James and give him one piece of money advice, what would it be?
Buy property.
Not a ground floor
not off the
unit
plan.
with a whole
not an off the plan. Wait and be able to view it. Sorry, that's probably what I would say to myself is, don't go and buy the first thing you can afford. Save a bit higher, do a bit of research and figure out like what is a good property and a good location for your budget, and don't buy to live in, buy to invest for your first one. That's probably what I would have told myself.
Very wise words, because it's easy when you're trying to get into the market that you want to get something that's a property,
Exactly.
but your goal isn't to buy a property, it's to buy a good property that gives you good equity growth, not headaches as well, but more that you're going to get good growth out of.
Exactly.
I mean,
it can be hard for some people because maybe they're only saving at a rate that they can't actually keep up with the way property prices go, but there's always affordable markets that still provide long-term capital growth. You don't need to be in the eastern suburbs or something like that in Sydney. There's plenty of affordable markets out there that you can still make a really good investment in.
Yeah, 100%. Well, James, thank you so much for sharing your story.
Thanks for having me.
Yeah, it's been great. There's so much there. Really excited for what you got coming up as well.
Thank you.
Thank you, James.
Cheers, guys. We'll catch you next time.
Cheers.